Quick video. I'm just going to show you the very simple way that I can help you to try and identify a market structure in obviously any market. Obviously we're going to use a few different markets here. I'm going to primarily be using GJ, but this works on any pair obviously. Just because you're reading candles, you're reading market structure, this is the most simplest way you should be able to use. I'm going to throw in a little special indicator that I can give you to help you find these and train your eye to be able to find these breaks in structure, these market structure swings, everything like that. So let's just really quickly jump into it. Here we are, GJ on the daily time frame. This doesn't matter what time frame you use, obviously market structure is king. So let's just look at GJ in this last couple of trading days over here, probably the last couple of months, last month, whatever it may be. And what I'm going to do for you is just, as you see right here, we are in a bullish market right here. So you can see just from a trend line, we're in a very bullish market. So realistically on the daily time frame, you should be looking for buys. That would be your trend most likely. So you can look at it like this in a trending market, just like this. However, you can also look at it like this as well. And this is how I look at it. So you have swing points in the market. So a swing point would be considered 3 candles. So you need 3 candles. So you need, for example, if we're looking at this part here, this middle candle is the tallest one, and then the one to the left, it has a lower high, and the one to the right has a lower high. Therefore, this point that I marked out right here, that is a swing high. Now a swing low would be the same but opposite. So if we were to find a swing low, this would be your swing low right there. Okay, so the reason why this is a swing low is because from the left, this is the lowest point in 3 candles. To the left, that is a higher low. This is a higher low, and this is the lowest low out of the 3 candles. And that is very easy to be able to identify swing points, okay? So if you see that these 2 swing points right here, you have the higher high, you have the high swing point, and you have the low swing point, okay? Now, what swing point is price breaking? Price is breaking the high swing point. Therefore, we are in bullish market structure, okay? Sorry, that is not what I meant to click. So we are in bullish market structure here. Now we can go on to the next leg. So this is just all you have to do. You just have to mark out your legs. So that would have already been taken out. So you have this point right here, that would have been taken out. So that's another higher high, we're still bullish. We have this lower low right here. And this can be where you get confused. Now, if there's 2 different examples that you could use. You could use this one right here, which would be a wick below these areas, because this would be counted as a swing low. So would you now be considering a bearish bias if this wick went below this low? Now, it doesn't really matter. You can be one of those traders that take the wicks. However, for me, I like bodies to be closing. So if this body closed below this low, then I would be looking for a bearish push to the downside, okay? And that's how I would determine my market structure. Now, if we carry on this, that never ended up closing below. So let's just say we have some equal highs right here. They both, the swing highs coincide with each other, and we have a market structure closure with this candle above this. So we are continuously bullish. Once again, we have a swing low right here. Do we close below it? No, we wick below it. So that could be called liquidity sweeping. Okay, when you just sweep and you get a wick, but above or below. So here, this wick would have been a liquidity sweep. Now we did actually get a closure above here, so this was maintaining the bullish structure once again. You only get a bearish structure shift once it closes below that certain price point which you have marked out. Okay, so through all of this, still bullish. Through all of this, still bullish. Okay, so that would be your market structure on, for example, the daily time frame. Now this can be transitioned down to the lower time frame. So for me, I like using the 4 hour. So as you can see in the 4 hour, this is very, very similar to the daily time frame. Okay, so this is a swing low right here, and if we were going to mark out where it started the bullish market structure, the bullish market structure would have started ever since this high got taken out and closed above. Okay, so right here we would have shifted our bias from bearish of since we took this low out. So we would have been bearish way back here. We were breaking market structure downside, closing below lows. Nice, we were looking for sales. We would only switch to bullish on this candle here. So when this closed above this candle right here, this swing point here, we flipped our bias to bullish. Therefore, on the lower time frames, when you're looking for your entry criteria, you should be going along with your trend, whatever time frame that might be, the 4 hour, 1 hour, daily, whatever your higher time frame is that you mark out your market structure and your trend. This is how you should do it. Okay, so let me just continue going along here. Once again, another example, bullish market structure there, continuous to buys. Okay, so this is where this week went into a little bit of a range. However, you can still trade in this. If you look at this through this point right here, this never closed below there. You can say, okay, build up of liquidity or whatever you want to say, but this gives you context to go into a lower time frame and take a trade. For example, as you see here, the highs are continuously being broken and the lows are being respected. Therefore, on the lower time frames, if you wanted and you saw a trade you should be taking, you should most likely be taking bullish trades if you can find a setup within this range. Now, that doesn't give you the context to go and take a trade. Just purely, oh yeah, it's bullish, I'm going to take a buy. No, you need other confluences along with this. You need an entry criteria, you need a plan, how you're going to execute, what pairs, what time frames, what sessions you're going to trade. All of these things make up a strategy in whole. So that is the manual way of being able to find these ways of looking. And just a really quick demonstration of just a way that you can use an indicator, not to do it for you, but to train your eyes. Because essentially, if I put this on, all these highs that I marked out for you in the manual way or with that white line, you can see that these are plotted on there for me. So it just shows me a lot easier. It trains my eyes. Okay, highs are being broken, therefore I'm taking, I should be in a bullish market structure trend. As you see down here, bearish, bearish, bearish. I should be looking for sales, etc., etc. So today, for example, on GJ, we broke and we closed below this area. Now, I took a sell in and amongst here. I'm not going to show you on this video because I don't want to make it too long. But I took a sell in amongst here and I still ended up taking an L. The reason being is because this is only one kind of phase to your strategy that you should be implemented. There has to be a step-by-step way that you decide upon yourself, upon your criteria that allows you to get into a trade. This is literally just teaching you market structure, trends, and most likely the first thing that you should consider when trying to enter a trade. So that's just a very nice indicator right here, fractal imbalance, fair value gap kind of spot. I'm going to show you the the settings in here. As you can see, you only need, these ones will be ticked when you come on to first getting it, and this one will not be. And what you want to do, as I said, your body, you want the body to be closing below the wicks, not just the wicks. You want just the bodies. And these two will be ticked. So what you want to do is you want to untick these two. You want to tick this one. Make sure that's 2, because obviously if you put it to 3, the fractal just shows it a little bit more laggy. And like I said, this only wants to be training your eye. You don't want to be relying upon it. Okay, so this is what I found to be the most easiest way to train your eye and to get better at seeing market structure shifts, market structure trends, etc. frames as well. And this will still implement on these lower time frames, as you can see. So you can use this to train your eye. As you see here, a lower low, breaking, closing. You could be looking for sales in here to take sell, continuous sales down here. So you can use all these confluences, whatever time frame you go into, as long as you've got a higher time frame context. It then holds a lot more value for you to be able to take a trade. It's a lot more, how would I say it, high probable. Okay, so that's all I'm going to leave you with here today. Yeah.